it's an 8% preferred return, which means, just to make numbers round, if you invest 100,000, you get back 8,000 per year, which is paid out quarterly. So it's 2,000 every quarter, which adds up to $8,000 per year. If you had invested 100,000, the whole time is between 5 to 7 years, and we're targeting a 2 to 2.5 equity multiple. So if you put in 100,000, you'll walk away with between 200 and 250,000.
What is up, everybody? I am Matt Drouin. I'm the host of the Go Big Live Real Estate Investors Podcast. I am psyched out of my mind to have Mr. Brandon Giddickson on the show today. Brandon is experienced in evaluating quality investment deals, asset and property management, sourcing, buying, and selling opportunities. He has evaluated and underwritten over $300 million of commercial real estate opportunities throughout the U.S. On the property management side, Brandon has managed both mixed use and short-term rental properties. He is currently focused on multifamily and triple net leased properties such as medical office buildings, or MOBs, which I have a lot of experience in. So he got his start with raising money in the nonprofit space on a volunteer basis. He has personally raised over $50,000 for leukemia and the Lymphoma Society. We'll want to get back into that too, because that's an amazing accomplishment. And also talking about our why today too. And has been responsible for over $115,000 being raised for Leukemia and Lymphoma Society through his leading a fundraising team. So I know that was a mouthful, but welcome on the show, Brandon. I appreciate it.
Matt, thank you so much, and appreciate that eloquent intro. You certainly inflated my ego for the rest of the day. So,
so. Brandon, first question, man. You were born and now you're here. What happened in between?
Oh boy, it's 28 years of a lot. I'll give you I guess an overview and an origin story. So to do that, I'll kind of take you back to my childhood, because it does tie into real estate investing and what I'm doing now. So my dad and his whole side of the family, they're from Long Island. And my mom and her whole side of the family is from Sweden. So my mom was born in Sweden and grew up predominantly on Long Island. In 2006, my dad passed away from Hodgkin's lymphoma, which is a form of blood cancer, which is one of the reasons why I raised money for charity for the past 5 years now. And after my dad passed, my mom and my siblings, we moved to Sweden 3 years after that. So from 2009 to 2012, I lived in Sweden. And then in 2012, I moved back to live with my uncle on Long Island. And it was a really, really interesting experience living in Sweden. I got to speak Swedish, or I got to learn Swedish. I speak it now. It's not super useful unless I'm at IKEA. That's really it. And in the off chance I meet people who are from Sweden that, live in the US. So I had a brief stint in Sweden, Long Island, and going through high school, going through college, I got my bachelor's in criminal justice. So I thought I wanted to be a cop, but I quickly realized that I wanted to pursue something a little bit safer in terms of my physical safety. So I went into the world of commercial real estate. I did office space leasing for a little bit. COVID hit, and it just really hurt that sector, And then I did a little bit of property management, a little bit of lending as well. And now I'm raising capital to buy commercial real estate.
Excellent. So Brandon, let's back up a little bit, because we have some young people to listen to the show, and some people that may not even have figured out what they want to do with their life. I want to take a moment to speak to them.
Right.
Because there's also people that listen to the show that have kids that might be in the same situation. I want to be a cop, and then real estate, right? So tell me about I don't know, maybe the struggles you went to in terms of trying to find what your future identity was going to be, because a lot of young people get asked what do you want to do for a living? And it was really stressful for me getting asked that question. And I kind of had to like lie about it.
Yeah.
So kind of tell me through your journey on that, because that experience is probably more fresh for you than it is for like the 60-year-old guy that I interviewed in the podcast a couple weeks ago.
Yeah, absolutely, Matt. So it was really interesting, right? When I when I graduated, I took a few of the police tests, and I like I said, I quickly realized that I wanted something safer physically.
Mhm.
And the reason why I pursued criminal justice was because just a lot of my family encouraged me to. I didn't have a tremendous amount of direction regarding what I wanted to pursue in the future,
Mhm.
as I was a teenager and as I was going through college. But then I quickly realized after taking a bunch of the police tests, real estate seems like an interesting path, and it seems like it could produce a lot of wealth in the future. And I saw that firsthand because my uncle owned a bunch of single family homes in the 80s and 90s on Long Island, which is in New York. And he got burnt pretty badly, predominantly because New York is not a landlord friendly state. Secondarily, he was buying single family homes. And then I would also say he probably didn't have a lot of the systems and processes in place because he was working a full time job for the
Mhm.
airlines, and, very demanding hours. So I don't think he had a lot of the infrastructure in place to handle his portfolio. So, you know, um, I didn't see that firsthand because I was born after he owned that portfolio, but he always told me stories about, just how stressful it was. And
Mhm.
then in 2010, after the market crash, he purchased a single family home in Montauk, so right near the Hamptons. And since 2010, his property is probably 3x in value, which is just incredible. And seeing that firsthand was pretty amazing because he did a lot of renovation work to the home to make it have a 3x property value. He installed a pool, he installed a deck, he put Bolivian rosewood flooring throughout the entire home and just made it really, really beautiful. And just seeing that firsthand, really spoke to me. And that's one of the reasons why I went into commercial real estate brokerage.
So going from brokerage, management, having a house in the family that piqued your curiosity,
Hmm.
then just launching right into the fund space,
Hmm.
right? So who gave you permission to do that? Like, what was the seminal moment that was like, because the reason why I wanted you to have wanted to have you on the show was because this is definitely an unconventional path. A lot of people are like, all right, you have to own a certain amount of single family houses before you can go big. Like, what happened?
Really, really good question. So after brokerage, I did sales for another just unrelated real estate career, and then a little bit of lending, and then property management. So I had a good hands-on approach in terms of real estate, right? Um, you know, Helping manage my family's short-term rental, managing also a mixed-use property that was in Manhattan, from brokerage to lending. And then also, I raised money for charity for the past 4 years for LLS. And
Mm-hmm.
that gave me the experience of raising capital. So I wanted to do something that was complementary. And I, I thought to myself, I always wanted to do something where I had a lion's share of the control. And then I also wanted to do something that hit kind of three pillars, right? I wanted to do something that utilized my skill set, something that had a market demand, and something where I was passionate. And, raising capital for real estate really hit those three pillars that, I felt that I could succeed in. And starting a fund, that's really the first um, sort of deal, if you really want to call it that,
Mm-hmm.
where I launched something on my own. And it was super, super stressful. Like launching a fund as your first deal is very cumbersome because you don't know what you don't know, you know? Um, it was super, super stressful. Now it's a lot easier because I've learned a lot along the way. I've had conversations with larger operators and sponsors and landlords who have given me a lot of help and guidance, basically. So yeah, it's been a super interesting journey. When I was raising money for charity, it was just trial and error. So the Leukemia and Lymphoma Society, they have a 10-week fundraising competition every single year. So I was a part of that 10-week fundraising competition. So raised about initially 73,000 in those 10 weeks, and then over the past number of years I've raised a little bit over that. But I like for me, because my why is so strong, because my dad died from cancer, like it really drove me to do everything in my power to raise money. Like I went on, I think I was on 10 podcasts in 10 weeks to raise money, called, texted, emailed every single person that was in my network. I made social media posts 3 or 4 times a day on every single platform. um, I I put I I went to a printing company that made a that they made a door panel for my car that had a QR code so people could make a donation. Um, and I made a post which was a little bit silly, but like I was passionate, stating that if a person made a $10,000 donation, that I would get their name tattooed on me, which was, a little bit crazy, but once again, I'm super passionate about this organization. Um, and what I found, the best way, always, whether you're raising money for charity, you're raising money for real estate, you're in the startup space, venture capital, private equity, whatever it is, personal outreach is the best way to raise money, hands down. So whether it's calling people, texting people, emailing people, in person meetings, personal outreach, 100%, at least from my perspective, has worked very, very well for me. And then I would also say, secondarily, is posting on social media, because you stay top of mind with people. And it's a good way to reach people without necessarily being super pushy. Those, from my perspective, would be the best. And then the third way is hosting in person events, because then you get to attract different people who you might not meet otherwise. Because when you invite certain people who are in your network, the people who are invited will invite other people as well. So it's super helpful.
So in the green room, we were talking about a multifamily deal. It's a 506B. For those of you listening, for 506B, it's an offering that cannot be publicly advertised or anything like that. So we have to be a little bit careful. If I ask any questions, Brandon, that are off limits, just tell me it's confident. Tell me it's classified, right? So, but let's talk about the processes in terms of how you started that raise, and all of the sort of like habitual tactical types of things that you used along the process to get to get there and make that a success.
Yeah, absolutely. Appreciate that, Matt. The first thing I did was I sent an email blast to people who I've spoken with in the past that, well, first of all, before I even started raising, I started having conversations with people who were in my network to sort of gauge their interest as to what they would feel uncomfortable, or, the amount that they would feel comfortable investing, and
Mm-hmm.
what types of deals they would want to invest in, whether it's multifamily, um, retail, industrial, whether it's, a 3-year hold or a 5-year hold or longer than that, or whether it cash flows from day one, or maybe it might not cash flow until month 18, just to kind of get an appetite of what they would feel comfortable investing in.
Mm-hmm.
And then from there, sent them all an email blast, and then I got some initial interest from a handful of the people, and then I followed up with most of them, um, whether it was a call, whether it was a text, whether it was an email. Usually, it was either a call or a text, though, and then from there you start to see who has an interest now, and then there's other people who they weren't quite ready yet, but they would want to invest in a future deal, you know. But those two things are super helpful. Number one, collecting the people who are in your network, seeing what their appetite is, sending them an email blast, and then following up with them.
So this is great. So there was a discovery process that started before you even had an opportunity. Right.
Absolutely.
So just like, what makes those people tick? Myself, I'm an investor. I don't care about cash flow. I care about long-term equity multiple. Right. But there's some investors that are motivated by cash flow and getting those checks. Right. So just getting that, I think, is really crucially important up front. And the best time to raise capital is like when you don't even have an opportunity, right? So it's just like there's no pressure. This is just sort of like a discovery. A lot of people reach out to me through the content I post on social media, for instance, seeing me as a subject matter expert, and they're just like, and a lot of these people, it starts from, and I don't know if this has happened to you, Brandon, but it starts from, hey, I've been thinking about picking up an investment property. I'd like to be able to like get together with you and talk to you about like your experience. And I get together with them, and through the process of discovery, we come to the realization that they really don't want to own property because, because they don't have time to, this might be somebody who owns a successful dental practice, right? So they went to dental school. They they built a practice from the ground up. They're skilled at managing dental hygienists and that sort of thing. And they don't have the time to, learn a whole new business and finding a deal and that sort of thing. And then it sounds like from there, then you got an opportunity, which I want to talk about, how the opportunity came about, right? Because we want to talk about deal flow and capital are kind of the two bottlenecks. So from there, you got an opportunity. What did that email look like when you blasted it out to your network? Was it kind of like super high level? Was it an entire like pitch deck? Was it just a simple 2-paragraph email of like kind of just a pulse check type of thing?
Great question. And for the record, I'm still experimenting with what works, with what's, like what really works well and, what's effective. But I don't include a pitch deck. I'll send them a pitch deck if they want more information. This way you can see who has serious interest. But I would just, I think I started it out with the geographic location, how I sourced it, and some information like the equity multiple, IRR, cash on cash, and other kind of metrics behind it. Um, why we think it's a good deal, our hold time, preferred return, and ending it with, if there is an interest, let me know, and we can have a call to see if it's a good fit, something like that.
Excellent. So let's back up a little bit because we forgot to talk about the deal flow portion of this thing. Like, where did this opportunity come from? Was this something that you found, or was this somebody where somebody else found, and then they were like, I don't know, Brandon might be able to be somebody that can help me raise the capital for this deal. Tell me about kind of the origin story of this actual opportunity.
Sure. So I'm not the direct operator of this deal. I'm what's called a co-GP. So I'm helping raise capital, basically. Legally, though, you can't just help raise capital from an SEC perspective. So once we purchase the deal, I'll help with marketing and asset management. But I found the operator at a mastermind last year. So it was a mastermind called Unblinded, and it's not specifically for people who are in the real estate space. It's just I had no intention of being at that mastermind. Someone who was in my network. They purchased a ticket a while back and they weren't able to attend, and they thought about me. So they sent me along, and it was a great experience. I met a handful of people, and the gentleman that I met right before I left, he pulled me aside because he overheard me having a conversation where I mentioned commercial real estate. I mentioned what I was doing, and that's how we connected.
Let's talk about the dialogue process with, because this is, you went to an event by accident.
Yeah.
Okay. And then you found somebody there who he didn't know you from Adam. You didn't know him from Adam. Tell me how did those conversations go? With, how to open up, and take me from there.
Yeah, so it was pretty interesting. Like I said, he just pulled me aside because he overheard me having a conversation. So had I not been talking about real estate in the previous conversation with the other person, we probably wouldn't have met, which is pretty incredible, and it's serendipitous. But after the mastermind, we started having a weekly conversation for about 30 minutes every Wednesday, really just to brainstorm about what he was doing, what I was doing, and seeing what worked well for the both of us, what was effective, what wasn't effective, just so we can help um, our our own business, basically. So it was super synergistic. And, after a few months, we kind of realized that there would be a little bit um, more synergy, basically, because he needed help raising some equity with his marketing, with asset management, stuff that I had experience with. So it worked out to be a really good fit. But, there was a lot of rapport that was being built. And I think that's really the biggest thing, is to build good relationships, build good rapport, and to add value where you can, basically.
Yeah. So this kind of blossomed into something, and it required putting the work in.
Yes, definitely.
So let's take a step in a different direction here. So the fund that you rolled out just recently, what type of SEC regulated offering is that?
So that's a 506C, which means I could market that publicly.
Okay, so let's talk about how did that even happen? You went from, all right, being GP on a multifamily syndication deal, and now all of a sudden you're launching a fund. Tell me through sort of was that another thing by accident, or was there sort of an aha moment that kind of led up to that coming about?
Yeah, so great question. The fund, I actually started the initial steps on that back in August of last year. So it has been a long process, and you learn a ton along the way about the SEC, how to raise capital, how to get all of your docs filed, and it is really intriguing. So started that back in August. I had no intention of, starting something like that, but someone who I know locally here in Connecticut, he had experience raising for a short-term rental fund last year, and he wanted to do something similar this year. We had been friends for a while, so there was a lot of rapport that was already there, basically. So I found it super intriguing, and we had the conversation, and we thought it would be super synergistic. And it was also intriguing too, because it's in a state that I love, which is Texas. So all of the properties that are being purchased are in Texas. So I just found it really intriguing, and I like the short-term rental space. So just because my family owns a short-term rental, so I have experience with that already. So it was kind of complementary.
Yeah, I mean that's a big jump. I mean, that's even intimidating for somebody like myself. I mean, I've put together joint ventures. I've raised capital for just like for bigger deals, sub $10 million, but typically there'd be like a million to $2 million raises, and I was able to put together the ownership group to make those deals happen without ever having to go to the SEC, right? Um, so who are you, the sole fund manager in this deal, or are you do you have a co fund manager with this driving the ship?
Excellent question. So there's a parent fund which is raising 10 million, and the fund that I have with my partner Hollis, that is it's called a fund of funds. So our fund is raising 4 million out of the 10 million for the parent fund. So all of the investors that invest in our fund, we write a large check to the parent fund. So we are a giant LP or a big investor. Our fund is just one investor in the parent fund, basically.
Okay, gotcha. So it is a 501c offering, so you can tell me about it publicly. But before I want to go into that, you said you learned a lot in the process. What are those things you learned specifically? Some tactical type of things that people listening to this can glean out of it.
It's a great question. So you have to find the balance of educating yourself before pursuing something and then taking action. Because ultimately, after you take action, you'll learn the most. You can only have so many conversations, read so many books, but you'll never get well-rounded feedback if you don't take action. But I probably would have done a little bit more research. Realistically, I probably would have just raised for a syndication early on before launching a fund. Um, but some of the things I learned was, working with a good company that helps you set up your docs, because you have to set up your PPM, your Blue Sky filings, a few other docs as well, and it's very cumbersome. So I would say work with a great company who helps you set up the back end, and then have consistent communication with your partners as well. Definitely.
Absolutely. So tell me about the prospectus for the fund. Now that we can talk about this one, but we can't talk about the other one.
So it's an 8% preferred return, which means, just to make numbers round, if you invest 100,000, you get back 8,000 per year, which is paid out quarterly. So it's 2,000 every quarter, which adds up to $8,000 per year. If you had invested 100,000, the whole time is between 5 to 7 years, and we're targeting a 2 to 2.5 equity multiple. So if you put in 100,000, you'll walk away with between 200 and 250,000.
Yeah, of course. And then what is the typical business model for I guess the buying criteria for this stuff? Like, what are you going to do with the assets? They're going to be predominantly short-term rental focused,
Yes.
right? So, tell me about kind of like the avatar of a specific. Now, are these multifamily properties, or are these like single family houses? Tell me about that stuff.
Yeah, so it's only single family homes with pools that have been in recession resistant markets. So some of my partners who are boots on the ground in Texas, they have a lot of data behind this, but they did a ton of research around markets where it didn't see a huge decline during 0809. So we're buying in really strong markets for both real estate and hospitality. Um, and then ultimately, once we buy the single family homes that are in our portfolio, we're going to sell them on a cap rate basis to a larger institution. So we want all of these properties to perform like a bond, basically, and be super safe. So, and then, put in really good technology, and then have them be as efficient as possible, where it's super hands off, where it's not cumbersome, and it would be super attractive to an institution that's not really buying upside. They're buying more so cash flow.
Absolutely. Got it. Brandon, we are running out of time here. I want to jump in the green room with you and definitely mastermind with you a little bit. So in closing, a lot of our listeners here are experienced real estate investors. They have a couple of, single family duplexes, that sort of thing. They know they need to go bigger from a commercial perspective, but they're kind of paralyzed and mystified with the whole process. Like, what are your words of advice for them in terms of like what they can do today, what they can do this week, this month to get oriented in that right direction?
It's a really good question. I would say do research about what asset classes you want to focus on, right? Also, once you find those asset classes, find operators and sponsors who are, just really good at what they do, not only from a AUM perspective, right? Also from a fiduciary interest, right? Make sure that they have great reviews and really good feedback from investors and from, other partners, and then have conversations with them and just, talk with them about how they got started. I think that's really, really important, but also provide value too. Don't just send a person a message saying that they want to, always make sure that you're providing value. So after you have a conversation with, a person that you've been wanting to speak with, make them introductions to people who they want to meet, because now you're ultimately providing value outside of what you do, which is super important. And I think it's going to make you stand out a lot more.
Excellent. That's money advice, Brandon. So if you're listening to this right now on Apple, Spotify, wherever you get your podcasts in podcast land, and you want to get deep insights on commercial real estate investing, and how you can swim upstream into the commercial real estate space, you have to join our exclusive Facebook group called the Go Big Live Real Estate Investors Group, where I post content. We post live Q&As with our esteemed guests like Brandon, and also exclusive free training content that I put out there to put value out there for people that are looking to learn how to raise capital, to learn how to underwrite commercial assets, general overview strategies, and very high value content. You got to join our Facebook group called Go Big Live Real Estate Investors Group. It's a closed group, so just request to invite to join. I'll let you in, and I'll be excited to speak with Brandon in the green room after the show here and mastermind with him. So, Brandon, thank you so much for being on the show. I appreciate it, man.
Appreciate that, Matt. Awesome conversation today.